We have a lot on our agenda for this evening, afternoon, or morning. So welcome everyone to California's exciting session. We're going to be talking about fundraising in the life sciences space in the U.S. We have a lot of expertise, probably a century plus worth of experience here at the table today. I'm looking forward to this interactive discussion. But to get things started, I'd like to invite Mr. Kwan, who is the Deputy Consul General, representing the Consul General of the Republic of Korea, Los Angeles office. So, Mr. Kwan, you have the floor.
네, 안녕하세요. 오늘 이렇게 우리 총영사관과 한국보건산업진흥원 그리고 한미생명과학인협회 공동으로 주관하는 생명공학 기업들이 미국에서 투자받는 방법이라는 매우 유익한 제목의 세미나에 참석해 주신 여러분께 총영사관을 대표해서 감사의 말씀을 드립니다. 오늘 세미나는 미국에서 활발하게 활동하고 계신 5분의 벤처기업 투자자를 초청하여서 패널 형식으로 진행된다고 들었습니다. 미국 투자자분들의 관점에서 어떻게 하면 한국 기업들이 미국에서 투자를 받을 수 있는지에 대한 전략을 이야기해 주시는 자리인 만큼 미국에 진출하려고 꿈꾸고 계시는 바이오 분야의 우수한 우리 과학자, 창업자 여러분들께서 매우 유익한 자리가 될 것으로 기대합니다. 최근 금리 인상과 경기 둔화 등으로 인해서 바이오 분야를 포함해서 전반적으로 투자 환경이 많이 악화된 것으로 알고 있습니다. 아무쪼록 오늘 이 세미나를 통해서 조금이나마 여러분들의 창업과 기업 운영에 도움이 되시길 바랍니다. 또한 오늘 이렇게 뜻깊은 세미나를 준비하기 위해 많은 노력을 해주신 이병화 박사님, 김현종 회장님 등 여러 단체 대표님들께도 심심한 감사의 말씀을 드립니다. Let me briefly recap what I just mentioned in Korean. I'm Deputy Consul General from Korean Consulate. And I am so honored to speak on behalf of the Korean Consulate in Los Angeles at this important seminar. Today's seminar is about how Korean entrepreneurs and scientists can take advantage of fertile ecosystem in biotech field in the United States. We have today 5 panelists from venture capitals. I am sure that there will be perfect guides for your dream of coming over to the United States to launch your new business in the biotech industry. I appreciate all the hard works of KAPAL and other co-organizers for today's seminar, and the consulate will continue to work with such crucial partners as KAPAL to provide meaningful assistance to young and ambitious Korean entrepreneurs. Thank you so much.
감사합니다. Thank you, Mr. Kwan, for that wonderful opening and introduction. Next, I'd like to invite Dr. Byung-ha Lee, who is representing KAPAL headquarters in the East Coast. Unfortunately, he wasn't able to join with us live in person, so we have a pre-recorded video to play for you all.
Ladies and gentlemen, thank you for coming to the KAPAL webinar series. I'm Byung-ha Lee, serving as the president of KAPAL. It brings me huge joy to see you all here today, both in person and virtually, eager to delve into the insight shared by our distinguished speakers on the funding roadmap. Since 2017, KAPAL has been diligently working to build a bridge between Korea and the US in the field of life sciences, aiming to share our knowledge and expertise. The KAPAL California chapter, under the leadership of Mr. Hyunjong Kim since 2021, supported by dedicated committee members, plays a crucial role in advancing this mission. I'd like to thank to the Consulate General of the Republic of Korea in LA and the Korea Health Industry Development Institute in USA for their great support, as always. I also appreciate to to all our exceptional speakers and partner organizations for their valuable contributions. I encourage you all to enjoy the event and take full advantage of the knowledge shared today. Thank you very much. 감사합니다.
Thank you, Dr. Lee. So just continuing on, I was able to switch over to my computer, so I think you guys can see my screen now. Can we get the slide going, please? I'll just share my screen now. So again, thank you. Today's session, despite the technical difficulties, will be an exciting discussion. So, funding roadmap, how to raise capital in the US life sciences market. Next slide. So just to introduce our esteemed sponsors, we have to give thanks and representation and recognition for all of the folks that helped make this event happen. So looking forward to continuing the discussion with everyone and this continued partnership moving forward. So next slide. Our topic today will cover, and we'll do the best within our time to sort of go over all of these topics. We'll start off with just a general overview of the U.S. life sciences market, touching upon key factors when it comes to importance of fundraising, specific perspective and focus from the venture capital in the life sciences market, challenges that they see, and just the industry in itself is seeing every single day. Strategic partnerships and collaborations, ideas and concepts, and really key facts and points that our esteemed panelists can really give us in terms of their insight to what they see every single day. Continuing on into just investors' perspective and future outlook. So hopefully we'll try our best to go over all of these topics today. But again, time will be of the essence. So next slide. We'll get into the whole, exciting part of the event. My name is Mike Lee. I'm a managing partner for Coleman & Care, a consulting firm here in California. I'm also the executive director for KAPAL, California. We have on the line, and we'll kind of go in the order from left to right. We'll have every single panelist sort of introduce themselves. So Mr. Yu, would you mind just unmuting yourself and just giving us a 2-minute brief of who you are?
Thank you, Mike, and thank you very much for the invitation to participate in this important panel. Very much looking forward to participating with my esteemed colleagues here. Like I believe Mike said, there are probably a century worth of experience here. On my end, I am a general partner and managing director at Accelerant Ventures. We're a med tech, health tech, and tech bio venture capital firm in Arizona. We invest in seed to Series A stage companies. We write check sizes anywhere from about $500,000 to $3 million. And we love investing in the kinds of technologies that help make healthcare more affordable, accessible, and more efficient. And that includes technologies at the intersection of life sciences and healthcare, where those discoveries and research at the bench side can truly translate into the clinic. We're very much looking forward to meeting you all.
Thank you, Mr. Yu, Dr. Yu. Moving to the next individual, we have Mr. David Crean.
Hi, good morning for many of the folks on the line. My name is David Crean, managing partner for Cardiff Advisory. It's an M&A advisory investment banking firm. Specifically, I cover healthcare and life sciences. As I mentioned, it's more on the mergers and acquisition as well as partnering front. I am also an emerging manager for Coast Bioventures. It's an emerging fund one I'm working on, and out currently raising, it would be a $15 million fund focused on pre-seed, pre-seed, all in the life sciences segment. So look forward to today's discussion.
Thank you, Mr. Crean. And next we have Chris Garabedian.
Great, thanks, Mike. Great to be here as part of this program. So I oversee two investment strategies. The first one is as CEO of Zontogeny. Zontogeny is a accelerator or early stage company incubator, but essentially we provide seed investments and active oversight to early stage life science companies, often with entrepreneurs, first-time CEOs, and scientific founders. The same team at Zontogeny also manages the Perceptive Zontogeny venture funds. And those venture funds are part of a larger multi-stage investor called Perceptive Advisors. They have multi-billions under management, mainly through their hedge fund. They have credit funds, and I run their venture strategy. We're on our second venture fund. We have $725 million under management. We've made about 26 investments since we closed the first fund in December 2019. Really happy to be part of this panel.
Thank you, Chris. Next, we have Mr. Sean Chang, but I believe we have another representative who's trying to log on, representing Ascension Ventures. So we can just skip Ascension and go to Yogesh, Dr. Yogesh.
Sure. 여러분께 안녕하십니까? Excuse me. My name Yogesh. By training, I'm a scientist. I complete my PhD from South Korea, from Daejeon. So that's the reason I can speak a little bit Korean. And now I'm in US. So came MIT, complete my postdoc, and switch my career to investment banking side. So I advise Korean clients, so from small pharma to large cap pharma in medtech, biotech, and CDMO, CRO space. Happy to hear. I'm honored to be here with Chris and David and all other panelists. Would love to discuss more on how we can help and raise capital in US.
Perfect. Thank you, Dr. Daima. So now the slide's back. We have a representative. The gentleman's name is Taha Jangada, representing Ascension Ventures. He's still trying to log on, so we'll field questions to him when he logs on. Yeah, to set the tone, let's get the show on the road. To set the tone, just talk about the overview of the life sciences market here in the U.S. Maybe we can just start off by asking Mr. Green a question. How do you assess the current opportunities and challenges in the U.S. life sciences market? And what factors influence investment decisions in this sector?
Yeah, thank you for the question. It's interesting, at least in the U.S. and certainly in a number of geographies around the world, the venture capital dynamics in the biopharma industry represent certainly a narrative of headwinds and challenges this year. Hopefully, we can certainly talk about maybe what 2024 looks like, but there's a strategic shift towards fewer deals, but more significant deals. There's plenty of money out there. Certainly love to hear more of that from my fellow esteemed panelists. But it's indicative of a sort of a prudent investment approach that is prioritizing more stable investments, where you see companies reinforcing the reserves for existing portfolios, perhaps optimizing timing for IPOs, which, as you know, in 2023 in the US market are few and far between, but certainly better than 2022, but nothing like 2021. Pursuing exit strategies to raise new funds and adapting really to the economic downturn. We're hoping that there's things going to change as it relates to inflation and to rates. But getting to the questions of what am I looking for? I generally look at first and foremost team, technology, IP. What is the market and the problem that you're trying to address, as well as competitive differentiation of what you're doing. Why is it so special? And frankly, at the end of the day, how are you planning to make a return for the investor? So, Mike, those are the key areas for me.
Appreciate that very much, Mr. Green. Just along on this topic, it's a very interesting question, and everyone sort of has a different perspective, or they may have the same. So I know this is kind of unexpected, but maybe Chris, both of the Chris's, if you guys can chime in on this topic.
Sure, I'll go first. So, I think we left a very exuberant time around the end of 2021. And what you saw there were you saw a lot of active public equity investors come in and pull many of those private companies into an IPO, where those companies in most eras would not be able to go public. So we saw probably too many companies go public when they shouldn't have. And that created a lot of reckoning. We have almost 200 or about 200 companies trading below cash, that are publicly traded. And most of those probably wish they were private. So as that trickled down to the venture capital side, you started really thinking harder about an exit that was not an IPO. How do I get to a data set that might be attractive to a acquirer or even a strategic deal to infuse more, cash into the company? Or how do I get to a data set that might attract later stage private investors? And so I think what we've seen over the last couple of years is a lot more discipline, a lot more focus on advancing an actual product into the clinic, and really figuring out how they can create enough runway to get to a clinical data readout that might allow them to go IPO, but also might allow them to be acquired by a large pharma.
Thank you, Chris. Very similar to what David was saying. How about you, Dr. Yu? And
yeah,
I
can go
trends? Yeah.
After that. So given as David said, given the macroeconomic conditions right now, the things shift towards from quantity to quality. So now people look more quality stuff rather than they are looking, to increase their portfolio or increasing their quantity. So as Chris mentioned, that high quality science is still valued by investors, by Wall Street. So focusing on quality, good data, and funding is of course, it's kind of a scrutiny side, but quality is still quality.
Thank you, Yogesh. Chris, Dr. Yu? Yeah.
Yeah, sure. I agree with everything my colleagues have said. And I thought I would actually add, maybe from the entrepreneur's perspective, since many of the attendees are seeking money, what you may end up hearing from us is, go find me a lead, right? I'd be interested in investing after you find me a lead. And what that means, the translation for that is, right now, as investors, our job is, we have a duty to our LPs to manage the portfolio we have. Unless you're a very new fund and you haven't made many investments, the worry right now is we need to extend runway for all of our companies, given the uncertainties of the market, the cost of capital, and not having an IPO exit window for many of them. So we as VCs are looking at our portfolios going, oh my gosh, that one's going to need more money in 12 months. That one, I don't know if that one's going to make it, frankly. And these others, I really need to focus on helping. So the time that we have to look at new deals has also shrunk. And, we investors, I'll say it first, I'll say it myself. I don't know if the other panelists will agree, but I'm lazy. If somebody else is going to do the due diligence, and I feel like they're going to go through the hard part of looking at a deal and ensuring quality, as Yogesh was mentioning, I'll let them do that and then come back around and look at a deal that I might like. So you might hear that more often as an entrepreneur, is go find me a lead and then come back and talk to me, because I think the environment has changed, and those are the kind of things that we're doing and seeing.
Appreciate that, Dr. Yu. Thank you so much. And last minute update, I believe we have Taha joining us, representing Ascension Ventures.
Sorry, you'd have thought this many years into post-COVID, I would have figured out how to use Zoom, but excited to join you all.
Thank you. Welcome. Can you give us a 30-second rundown of Ascension Ventures?
Yeah, of course. So Ascension is a $1 billion fund. Ascension Ventures is a $1 billion fund made up of a consortium of 13 like-minded public nonprofit healthcare organizations, which represents almost 14% of U.S. healthcare. We're stage agnostic, so we've invested in companies being spun out of Google all the way to supporting private equity and doing leverage buyouts. We're also healthcare sector agnostic, right? So we have a technology arm that invests in software. We have a medical device arm, and we also have a services arm. So services, you can think of traditional, new payment models and new care delivery models. We've been around for 22 years. I believe we are the longest tenured healthcare organization fund. And our check sizes are anywhere from 5 million to 12 million, and then we'll invest up to 15. So excited to be here with you all.
Thank you, Todd. Glad you can join us today. Yeah, just to get you caught up, we've been talking about from every specialist and, experienced investors' perspective on what they are seeing in the market, and the continuous trend has been, the shift from, quantity, the vast number of deals that were going on, to more of a quality focused, as your Gage mentioned, word for word, but just looking at, with the anticipation of the, economic downturn perhaps, but really looking at companies and the runway that these companies are securing with a differentiation in IP. So, Dr. Yu mentioned something, when it comes to something that he's looking for maybe 12 months down the road. So maybe we can address this question specifically to him, in terms of a specific sector or a subsector within the life sciences market. What particular, areas do you see or find most promising, and what factors that these companies that you may be looking at right now, or industries that you're looking at right now, contribute to your optimism?
Yeah, I mean, I'd be remiss without saying anything to do with AI, of course, and AI applied to anything to do with drug discovery and life sciences, right? And the trick here is for investors as well as the entrepreneurs who are presenting these technologies is, focusing on the value that you're truly bringing with the technology enablement. We have to keep our heads about us and understand that AI is still just a tool, and the ultimate goal is to realize value out of use of that tool, whether it's efficiency or speed, cost savings, et cetera. But of course, that's an area that we have to be aware of and we have to look at, and the speed at which things are developing is truly breathtaking. So looking at anything to do with AI applied to our industry, there are companies like Recursion Pharmaceuticals and others who I think are showing us that you can apply AI in a industrial scale production type of solution. And there are others in the direct healthcare space like Hippocratic AI and others that are, again, looking at AI applied as a tool. The other area I would say that we're excited about is regenerative medicine and health span solutions. I think there's a connection between the things that we measure through our life sciences technologies and the impact on our ability to live well as we age. And that there's a paper that just came out in Nature just a week or two ago showing that our organs age at different rates. There are protein biomarkers in the blood that can actually predict and help us monitor how our systems age. And I think thinking about that and what we're going to do from regenerative medicine perspective is an area of interest for our fund. So yeah, I'll stop there and ask the other panelists what they.
Absolutely, chime in. This is just a fireside chat. Ready, fire.
Yeah, Mike, I think Chris brings up a great point, especially on AI. I'm reading a report just recently about one out of every 5 investments is going into something associated with AI. And I often joke with some of the entrepreneurs that I advise and meet with, and I said, is there any way of incorporating AI into what you're doing? Because you're probably more likely to bring in some money. But in addition to regenerative medicine, some of the other areas I like, certainly there's a lot of buzz around everything to do with GLP-1s and associated with what I call diabesity. So that's diabetes and obesity. But some of the other areas certainly is still oncology, inflammatory conditions, and then neurodegeneration, where I think we're seeing a lot of interest. Two areas that I'm frankly really excited about, and I spend a lot of time on, and I spend a lot of time there because of my banking background as an investment banker, is where there's a lot of private equity buyers, because I always try to think like the buyer universe is really on the contract research organization and contract development manufacturing organizations, where they're serving the pharmaceutical biotechnology industry, but those are great businesses to sort of invest in and quickly get up to EBITDA positive and see a liquidity event in terms of purchase. So I'm spending a lot of time in that space as well, but I'd love to hear what the others are thinking.
Yeah, I'm the natural tech investor in the room. Fortunately, Sean can be here. So it's interesting actually you bring up AI. I think if you step back and look at it, right, the per capita, and sorry, I'm on my phone if my video's off. The per capita data production curve has never been higher, right? It's exponential trajectory. And one of the areas that I'm reminded of in this call is thinking of AlphaFold that was developed by DeepMind, right, where they were able to predict, I think, forgive me if I'm wrong, but I believe they were able to predict the structure of almost 200 million proteins, right, which essentially ends up being the known universe of proteins, where now it allows researchers, clinicians, postdoc students to really actually search, makes it very searchable to now solve a lot of problems from humanity, all the way from developing, a novel malaria vaccine to combating microbial resistance. That's kind of the point of view that I feel like I'm taking at the moment. However, similar in vein, I'm not looking to invest in any AI-based company just yet, right? However, if I think of it from a life science lens, the ability to apply this in diagnostics, right, where we can include multi-omics data to do better disease production in a non-invasive way, I think there's a lot of value there. But cybersecurity is an area that I think is going to become more and more apparent. And thankfully, there's a lot of tailwinds now, with the FDA tied to devices one, and then now the HHS announcing that, there might be government pools that will be providing basic cybersecurity posture management for providers.
Appreciate that insight. Thank you, Taha. Chris?
Yeah, I'll just add, we're less tech centric, although we do think AI is going to have an impact. We think it's going to be more on the drug discovery and the tools side, and we still think we're in the early innings there. So I think in this tougher environment, people are really looking to where are their validated targets? Where can you differentiate? People want to take less target risk. So while we might identify, a myriad of new target ID that is unvalidated, it takes a lot of work, and many of those end up not working. We confuse, causation or correlation with causation still too frequently. But there's been a little bit of a shuffling of the deck in terms of therapeutic focus. Rare disease and cancer were really big. They're still, present, but I think you're seeing, and David pointed this out, immune inflammatory disease has really moved up the ranks. Cardiometabolic, obviously, we're seeing a cottage industry of those that are going to be trying to take advantage and exploiting where there may be unmet needs around the GLP-1s and that whole ecosystem. We're seeing a lot more interest in the eye. So ophthalmology, retinal disease, we just saw a company pop 200% on some phase 2 data that people weren't really watching that closely. So, and we're seeing a lot of bolt-on acquisitions. So I think what venture capitalists are doing, and we're doing it as well, is trying to anticipate where is pharma going to be focusing their attention therapeutically? What are they going to be looking for? And in the US, we have this legislation called Inflation Reduction Act that has put some price controls, and that's making people rethink how they develop, how they prioritize pipelines. And as VC investors, you have to think about that, because those are the potential acquirers of your company. So you want to try to overlap with where they're going to be going with their pipelines.
Very well put. And, just for the audience to understand what we're trying to accomplish today is to really understand the mindset of the investors, the strategic mindset, understanding how they think about this particular product right now versus tomorrow. So that, you all as audience members can sort of figure out strategically how to position yourselves as you try to grow your companies. Let's just move on to the next topic, which would be sort of the discussion around importance of funding in life sciences. Maybe we can talk about something more specific, when it comes to raising capital itself. A lot of small startups may just invest their own money versus going out and looking for funding. So just from an investor's perspective, why is securing funding particularly critical for life sciences companies? And how does this action impact the company's ability to navigate through the complexities, of just, growth, research development, and just the regulatory complexities? Maybe we can ask Chris Garabian this question.
Yeah, and just so I understand how all of those factors are impacting the investor mindset. I just want to clarify the question, Mike. Yeah, so look, I think we're seeing a lot of dynamic changes going on in the industry broadly, and I think we definitely think about all those things. It's probably what has been driving a little bit of the delay in a recovery in our markets. So besides the macro market environment with interest rates, right, we saw the COVID trade where a lot of generalist investors kind of fled, the biotech sectors when they, moved into it during COVID. And I think in our industry, we're seeing a lot of headwinds, such as, still have FDA uncertainty of how they're going to make calls. A lot of companies have products going on clinical hold that are unanticipated. Sometimes it's even favorable FDA decisions that people aren't expecting. And so, that's still a factor. You have FTC issues that have brought in some uncertainty around M&A, and are they getting more conservative? So these are all things that we have to think about, especially, when we're trying to get more capital efficient. So we want to invest and make sure that that money goes further and advances those products further in development. And so sometimes that means there's a little bit of a paradox. And David may have mentioned this earlier. You're seeing large rounds. You're still seeing for those fortunate companies that get financed, there's more of a likelihood that investors want to put more money in so that they have a longer runway to get to a clinical readout. But at the same time, they're saying, don't build out big teams, keep your burn low. And we're doing this because we want you to outsource and get to data, right? And we don't want to be stuck with a bridge to nowhere where we have to do insider rounds or rely on some other investor to come in to save the program. So those are a lot of the competing things that are that investors will have to juggle when they decide which investments to make.
Thank you, Chris, for that. How about we take a look at this from, just a fit model, right? You have, investors, venture capitalists that want to invest in a certain technology, and then, products and companies wanting to sort of match up. But there's a fit equation that has to make sense, right? So all of you all sort of look at not only different types of products, be it AI versus not, just a simple example. But when it comes to the ability for your firm to be able to really help a company grow to the next level, in terms of understanding, is this the right decision for a company to, knock on the doors of, one VC firm versus another? Can we talk about that for a minute? Maybe Chris, you can talk about that.
So yeah, our model is a little bit unique in that we started because we saw too many VC firms that were doing their own company creation. They were selecting their preferred CEO to come in and to lead a company that they may have incubated. And then they would want them to build out a, blue chip, top tier management team. And what we were seeing was that they were passing over a lot of good technologies, sometimes because an entrepreneur was attached to it. Sometimes it was because, you know, it wasn't coming from a notable institution in the US or wasn't based in the Boston, Cambridge area or San Francisco. So we said, wait a minute, if we can find a model that embraces that entrepreneur, the first-time CEO, we can still get access to good technologies, but they might need a little bit more oversight. They might need a little bit more professional support to make sure that they don't make those early rookie mistakes in an early stage company. And that includes geography. And I think that's relevant for this discussion, which is, you know, we said, look, we don't really care where the technology comes from or where the company resides. If we like your technology, we will work with you and collaborate with you to drive it to success. And so I think you've seen a proliferation of more of those types of models. Curie Bio is a good example. Pillar had Petrie. Many of these that are trying to support portal innovations in Chicago is another one. So we're seeing more of these models, and you've had this movement called founder-led biotech, where there's almost a movement of, you know, postdocs and people early in their career that's never been in industry to take their technology and try to be the CEO of an early stage company. And that's very risky, but if you have the right investor who can provide the right direction and oversight, it can work. That's our opinion.
Thank you, Chris. Anybody else would like to chime in on this topic?
Yeah,
Yeah,
sorry, go ahead.
No, go ahead, Todd. Go ahead.
Yeah, I was going to layer in something. Chris, you mentioned, you know, the ability to go founder friendly. I'm always reminded of what, you know, obviously it started at Stanford, but I'm reminded what biodesign did many years ago. And now that really proliferated the idea of, you know, building multidisciplinary academic teams to go and build a company. Right. And there's been multiple iterations. I think, you know, like University of Chicago or Northwestern has a program. Johns Hopkins has a program. But one unique one I've really fell in love with is what Texas Medical Center did. You know, they're based in Houston at a time when, you know, Houston's always been thought of as a oil and gas town. Right. However, it hosts the world's largest medical center complex with 36 institutions, you know, many of them which are research institutions and 4 medical schools. And they took the same concept by design, except said, you know, how do we get member engagement or organizational engagement, where now they're able to pull postdocs from each of the medical research institutions and say, we are going to kind of do what you do at Disney World, right? We're going to give you fast pass. So if you want to build a company in cardiology, you know, we will we'll make you a W-2 employee. You'll get academic credentials, and we will give you office space and an entire bank of advisors, where now you can go into a cath lab, you can go into the OR, you can go into the administrative side and find very proprietary IP or identify certain problems, and you're equipped to go raise your next round. So I've seen a lot of those models, and I think the more we're able to engage academia and able to pull them or find opportunities to get them to take things commercial and take those risks, I think we're going to be set for a much more longer tenured industry.
Thank you, Taha. Maybe we can just add a little bit more flavor, you know, addressing this question to, you know, David here, with, you know, many different options when it comes to, you know, funding sources, you know, traditional venture capital, you know, private equity, or just alternative funding models that exist out there. You know, what do you look for as an investor or just an advisor, you know, when it comes to, you know, strategic partnerships or corporate investments?
Yeah, it's a great question. Well, first of all, just taking a step back, I think one of the messages, or a couple messages that these entrepreneurs and founders need to have, and if there's anything that you take away, it's just being capitally efficient with your plans, understanding how you're going to use money, especially going into 2024, because it might take a little while into 2024. You're going to have to really extend your runway. But then when I start taking a look at, you know, the capital financing plans, you know, I need to take a look. Are they believable? Are they raising money in parallel, not only from maybe from a dilutive standpoint on the equity side, but then also looking at even non-dilutive, whether that's grants, foundations, what have you, looking at strategic partnerships. You know, many cases that those strategic partnerships ultimately turn into a buyer of the business. So, and where you're going to get, you know, true traction, they're going to help out and throw some resources at you and advance your company, advance your technology, perhaps even build some new IP. So I think the strategic partnership is certainly a very critical one, but then also, you know, sort of the non-traditional investor side. I think you need to take a look at corporate venture capital, because that sometimes is a nice feeder mechanism also into the strategic angle.
Thank you, David.
Yeah, I can add here something. Yeah, sure. I can add here, like as David mentioned, that VC fund or corporate VC or find some alternative funding options. It depends on your need, depends on if it is a biopharma, life science company, try to get as early as specialist funding from VC or you know, corporate fund. If it is medtech or some other company in AI space or digital health, then those funders, you know, the family offices, non-dilutive funding options that might be a good fit here. So it's, I would say it depends on your need.
Thank you, Yogesh. I mean, just along this vein of thought here, you know, if we can transition a little bit deeper into your mindset as to what you look for as an investor or an advisor, you know, looking at corporate partnerships and capital raise, what, you know, we can address this question to Dr. Yu. Like, can you walk us through just high level, like your due diligence process? What key considerations do you really, you know, set as high importance when it comes to your decision making?
Yeah, I mean, I think one of the other panelists mentioned it, founder, and everything about that founder is very important. In a due diligence process, you may go, you know, several months of fairly regular communications between the entrepreneur and their entrepreneurial team with an investor and a group of investors. So we need to get to know you and get to know what makes you tick, right? What really motivates you to change the world with what you are building. So that's truly, I know it's cliche, but it is the number one thing that we look for is what motivates the founder and what are the characteristics and skills and experience that founder brings to the table. Then the you know, classic due diligence, you know, checklist, you can think of just as with a term sheet, there are specific things you got to check off on and know what each one of those terms mean as you negotiate. It's the same with the due diligence list. You're checking off on everything about the company, thinking about it from the perspective of where the you know, venture fund has a philosophy and a direction that it wants to go, and therefore it's investing in companies that fit that vision. The venture fund itself has its own portfolio, and there's this so-called portfolio construction where we have to think about which companies are we investing in what life cycle of that fund, which ones will return and what we think they'll return. So there are a bunch of complexities that go beyond just the initial due diligence that you do on a founder, the technology, the company, the market, the, you know, competition, the IP, you know, all that landscape. There's also, from the VC perspective, the concerns that we have around following our vision, making returns for our LPs happen, and our portfolio and how we construct it. And then finally, of course, there's the market that we've just you know, discussed at length here, and how we have to think about our investments in light of what's happening in the market.
Thank you, Dr. Yu. Go ahead, Chris.
Yeah, I'll just add, you know, I think when times are good and we have healthy markets, you don't see the tension that often exists between management and investors the way you do when times are tough. And what I mean by that is that when money's flowing and you can give good salaries and you can build big teams and everybody gets a bonus and they can go public and everybody can look at a great stock price. You really don't have to worry about these things. But when you see contractions in the market, what Chris was saying, I mean, you really have to focus on return on investment, and every dollar that's spent, you're scrutinizing. And so that's when the tension, because the management just wants to do their job. They want to get paid. They want to build their teams. And they almost have to think more like investors. Like, do you really need to hire that CFO right now? Can you get by with a director of finance, right? Do you really need an in-house general counsel? Do you really, we start to question what is needed to drive real value. And then if we're successful, great. We're happy to allow the company to build out. But you see more of this tension between management goals and objectives and, investor goals and objectives during these tough times. And that's why it makes for more difficult conversations, a little bit more heavy hands from boards of directors. But at the end of the day, the key ingredient is investors need to be as excited about the technology as the management team. And the management team should be as interested in avoiding dilution or, overcapitalizing the company. They should be as sensitive to making that money go as far as they can to serve investors. And that's the difference between those companies that really work well during these times and those that are having challenges.
Thank you, Chris, for that insight. Go ahead, Dr. Yu.
Oh, sorry. Yeah, and maybe I'll just add one more thing that I just realized I forgot to mention. Of course, this is a webinar for companies in South Korea trying to understand the investor mindset here in the States. And I'll say that as we look at companies that are not from the US, one of the big validators that we look for is who's on their advisory board that we might know, that we can talk to and vet, that give credibility and validation to the team. Because as I mentioned, that founding team is critical. So we can really understand where they came from, what was their training, what experience level do they bring to the table in the startup. So there's a need for almost a brand for the entrepreneur to establish themselves and say, I am a great company. And it happens all the time. It's not like it's a hard thing. It's more that having those kind of cross the international relationships, I think, really go a long way, especially in the life sciences market.
One thing I want to add here for cross-border transaction. So whenever we think about any cross-border transaction, the key question for investor is how we can trust. The trust is the key here. So I advise most of my Korean clients that try to show them that technology is differentiated. They have good company, good team. Be realistic about valuation. Be realistic about that, show them a good plan that how they can utilize their capital in capital efficient way. So that's a way you can win the investors' trust. And once you trust, they are more comfortable to invest, even though it is a cross-border transaction, but they are more comfortable to participate in the financing round. So that's one point I want to add here.
Thank you, Dr. Damer. Taha, anything to add to this point?
I think all bases are covered. Honestly here, you really have to, I'd say, coming from the operator side, I've thankfully had the opportunity to spend both sides of the table. Really, you're getting married to your investor, right? And whoever is on your board is just as important as your co-founder, right? And I think in a good market, deals were getting done very, very quickly. And unfortunately, there are a lot of tourist investors that came into our industry. And now, unfortunately, you see companies that are being wound down because they were tourists and didn't understand how long it takes for a medtech business to gain traction. And I think it was a disservice to our industry. And unfortunately, even taking the point of view of a corporate fund, we at corporates, it's always interesting for us to raise capital, right? Because depends on how our actual sponsor entity is doing. And honestly, seeing this many markdowns because there were so many tourists that came in our industry has lingering and long-term effects that hit us all broadly.
Thank you, Taha. Amongst the audience, we may have a vast spectrum of participants from just super green concept-based startups all the way through post-revenue, making a lot of money type of entrepreneurs on the call. Can you talk to us about just kind of an extreme example, right? I know we talk about in the state of our current economy, looking at just the nature of being risk averse and having all of the team and alignments all structured for investors to feel confident that this marriage is going to be a success between the founder and the investor. But are there any examples, just out of curiosity, that you can draw from your experiences where you took a look at a pitch, maybe not even a direct pitch, but just a concept that you heard of, and you all of a sudden had this inclination to really drive it, develop it, grow it, want to invest it? Have any of you guys experienced something like that?
Maybe I'll layer back or piggyback on the last question. This is a good example of where having a corporate is valuable, right? I think that when you look for a CVC, you naturally like, oh, maybe they'll buy me in the future. One, two, maybe I'll just get a free customer. But a lot of times you get the voice of the customer, which matters a lot, especially when you're early on. There's a great example, I think, in our portfolio. Being a provider, we have the opportunity to, support clinical trials, one, and two, support even the positioning, right? And a good collaboration that we had that led to an investment was our investment in a company called Imperative Care. And, now it is being used in 10 to 20 Ascension hospitals. But what this allowed us to do is we were able to limit risk by engaging our, the resource group, which is a group purchasing organization for all Ascension hospitals across the country, to understand what the economical impact would be and understand what the other competitors that were in the market were pushing. So we understand the economic and financial side of this in the future, because it's a long-term investment. And then secondarily, we were able to engage a wide variety of clinicians to understand what the clinical feedback would be, how long education would take for transitioning into something different, and actually if there would be any workflow changes as well that we weren't being mindful of. So I think you have great opportunities like that. Another example is we were evaluating a company and the exact opposite happened. A lot of investors were very excited about the opportunity. However, we realized that clinicians would take a very long time to actually move forward in something like this. And what we ended up doing is we kicked the can down the road, and we're hoping there's something there in the future.
Thank you, Taha. Any other experiences to draw from?
Yeah, sure. I believe this year was very good year for Korean life science biopharma industry. There was 3 major deals happened. Number one, that Chunghan, they have HDAC6 inhibitor, and it was deal done by Novartis, $1.2 billion deal. Another was the small ADC company in Cambridge based, originally from South Korea, Aurum Therapeutics. They got over $100 million for their ADC molecule. It's a $100 million deal. And long time back, there was $1.3 billion deal by J&J and Yuhan. They have their subsidiary in USA. So there are a lot of good examples which happened like from 2020 to 2023 in between. So this year, those are 2 major examples I can say. And there are a lot of underground deal ongoing in CDMO, CRO space. So again, Korea has potential. They have good technology. It needs some kind of a collaborative and the trust and how you can differentiate yourself, how you can show them that, okay, we are capital efficient, good technology, and can add value to the patient in US and healthcare ecosystem. So those are the key things, and those are the examples in front of top of my head.
Absolutely. Thank you so much, Dr. Dema. Maybe we can address a question kind of back to Chris. Oh, go ahead. Chris, did you want to add a point to that?
No, you go to the next question. I was just going to give an example to bring it back to what Yogesh said, which was it's really about quality. And so I can tell you, I got an email 2 days ago, and the technology looks really good from a Korean company that's preparing to go on the KOSDAQ, right, listing, but they want to spin out specific programs to start a new co in the US. And we're taking a close look at it. And it's really based because of the quality of the programs. We really honestly didn't care where it came from, but it just happened to be a Korean company. And we said, yeah, let's take a look. This could be very interesting. And we're not going to say no because it comes out of Korea. We would say yes because the technology is of high quality.
Thank you, Chris.
It's nice to hear, Chris. Awesome.
Yep.
Thank you. That's 2 days ago. Perfect timing.
Yep.
Yeah, let's switch gears. Just from a mindset of being prepared, right, as an entrepreneur, founder, so that prior to approaching, individuals like yourselves, like what are some of the misconceptions or mistakes that you routinely see from founders approaching you, just decks or pitches or just concepts in itself? Can we talk about that just around the room?
Yeah,
Can I go first? Oh, sorry.
Yeah,
Chris.
please, Yogesh, yeah.
Given my experience, I engaged with Korean clients from last more than 3 years, regardless of time zone difference, regardless of the language barrier. There are some, I saw many times the Korean deck, Korean presentation. I would say the communication is the key here. Don't worry about the language. Don't worry about the timing difference and all. If you can communicate your story well, if you can simplify your scientific concept, biology is complex. You have to this signaling pathway, that one, this one. Try to simplify it as much as you can, and present them in an efficient way. And in USA, you have to think about the investor's mindset. They are more about tell your story, how enthusiastic you are, and see that where you can take this technology from here to here. Show them this is step number 1, 2, 3, clear about this, communicate that well. Which is many times the Korean founders, they are not able to do that. Like they're trying, but not at that level. So that's why the many advisors like David, me, and here to help. So that's my takeaway. So the thing is, try to communicate in an efficient way. I can talk more, but I would before I would Chris or anything else want to join.
Thank you. Okay.
Yeah, I was just going to say there are some basic principles of what is appealing to investors, and it has far less to do with the experience of the team, how well designed the slides are, all of that. It really, and most VCs will say, oh, we're talking to a Korean company where English is not their first language. They're not going to hold them to the same standard as a group that comes out of MIT, right, in the US. So they're going to adjust and calibrate. But one thing that each investor always looks for is they want them to really understand their technology and their sector, whatever therapeutic area, whatever area they're competing in, they really need to come across that they understand that technology and that market very well. And they need to be able to convey that knowledge and that smartness, right? They need to come across as smart in knowing it. And then obviously passionate and ready to execute, but it has to be done with authenticity, right? and not overplay your hand. So what I mean by that is that a lot of teams will know they have a deficiency in a certain area. Maybe it's manufacturing and CMC. Maybe it's regulatory, right? Maybe it's commercial, but that they explain that we may need to hire somebody, or we're looking for advisors who can help us with X, or maybe you investors will be able to fill in the gaps. So, kind of humility is not false modesty. Humility is knowing what you're good at and not shying away from that. Stepping up when you are the expert in the room, but also acknowledging where you're not the expert. And I think if you can, figure out how to convey that in a pitch, that will go a long way toward getting credibility with investors.
Thank you for that amazing insight. How about the other folks? Dr. Yu, David? Taha?
Yeah, I can go just on the heels of Chris. I think he's absolutely spot on. For me, it comes down to three main things. Do I have a team, or at least a CEO or a founder who's coachable? Chris started to refer to it a little bit, or maybe infer to it a little bit, but we all know that they might not have all the answers. That's fine, but admit to it, right? Don't try to make stuff up, right? So be coachable. And as an advisor, just like Yogesh, we look at CEOs, say, is this someone who I want to work with? And in Western Hemisphere, we have a thing that we call the no jerk policy, right? So we like to work with people who are able to listen and take our advice. The second one, and certainly Chris started to talk a lot about this, is, is the plan credible? And that's a super, super important part. And, can they tell a convincing story? Just like Yogesh was talking about, regardless of maybe the language barriers, but you have to be able to tell a convincing story for an investor to write a check or to take another call. So those are the things that are important to me.
Thank you, David. Taha?
Yeah, and I think the only other thing I'd add, is the plan is always important, but the plan always, I had a instructor many years ago, and at the VA when I was working in the ED, and he always say, you always have a Alpha plan, Bravo plan, and Charlie plan. Second bullets start flying, Alpha, Bravo, and Charlie all go out the door. So you better have Delta there. And that is just as important in war theaters as it is operating theaters and entrepreneurs as well. And I think really having your plan tied to milestones and showing the underlying assumptions behind it, right? That's a thing I always test, right? I pressure test it to see, and I'll intend to even say things that are very antagonistic to see how the CEO responds. Because it's a long-standing relationship that you have with the entrepreneur. The other thing that I will say too is, I think these high-in-the-sky platform plays had its era, and I think in the market that we're in today, we need to be much more on the immediate addressable products and looking at comps based on certain solutions. So really, I think it ends up being team, operational rigor, and making sure they fall in love with the problem and not the solution.
Appreciate that. Thank you. Dr. Yu?
I don't think I can add much more to what these fine gentlemen have said already. The only thing I'll add is, again, trying to look at it from the 50 or so entrepreneurs on the line, you also have the opportunity to vet the investor, right? So we'll probably get to this topic as well, which is who are the other investors who have supported you so far to get to this point? That matters. And you're building your family. So when you think about what do I bring to the table, you should also be thinking about what does that investor truly bring to the table? Not only do I, fall in love with them and get married, but do they really bring the resources that I'm going to need that I lack? That will make the company successful. And I think that's your right as an entrepreneur to do your homework and diligence on your investor. we actually tell every company that we're serious about and we go through diligence with is we're going to give you every single one of our CEOs of our portfolio, and we need you to talk to each one of them because I want you to see how we work with, as an investor, how we work with our companies. Because I think that's really key. It's a cultural thing as well as make sure your investors are resourcing you appropriately.
Appreciate that, Dr. Yu. Thank you so much. We're just about that time where we need to wrap up. It's been an amazing journey over the last, an hour or so. So much insight when it comes to wisdom, just drawn from the experiences, decades after decades of experience. It's amazing. And we are thankful, for your time, effort, and energy, not only to the industry, but to the participants on the call. Looking forward to continued engagement and just the guidance that your wisdom has been able to provide, for the audience. So really appreciate everyone's time this evening. On the screen, you'll see, with permission, everyone's email addresses, representing the companies and the funds and the venture firms that they represent. So feel free to reach out with any questions. This slide deck with this basic information will be distributed to the attendees of this webinar. So be on the lookout for that. And just moving on to the closing part of our webinar, we wanted to pay respect to one of our sponsors as well, representing KITI, which is the Korean Health Industry Development Institute of the United States of America, Dr. Soonman Park. We have a short video from him giving us a quick closing remark.
Recording in progress.
Hello, everyone. My name is Soonman Park. I am the president of the U.S. office of the Korea Health Industry Development Institute. I want to extend a special thank you to Mr. Mike Lee, Chris Yu, David Green, Chris Garabidian, Sean Jung, and Dr. Yogishi Deyama for attending this event as the panelist and the moderator. I'd also like to thank Dr. Lee Byung-ha, the president of the KAPAL. As you all know, raising capital in the U.S. life sciences market has been struggling since the pandemic. Over 30% has been decreasing every year. A lot of startups stay in trouble to get proper VC fund to penetrate their R&D pipelines. And many pharmaceuticals are also hesitant to expand their pipelines now. However, I hope you can get some pathways to address these issues by today's talk. My office in Boston is helping the Korean healthcare industry to collaborate with the U.S. partners. Feel free to contact us every time you want. We'll do our best. Before closing my remarks, I want to extend an extra special thanks to Hyun-Jong Kim, KAPAL CA President, and FLANN CEO for designing this entire program and arranging all of the details about this event. Thank you all for attending today's event.
That was a wonderful video from Dr. Park, and maybe a couple more minutes. I'd like to give the floor to Mr. Kim, representing KAPAL California as the president.
So can you hear me? So I'm Hyun-Jong Kim. So many guys thankfully mentioned my name. So first of all, thank you to our audience for attending this webinar. Also, I really appreciate Consolidated General of Los Angeles and the KITI Soonman Park for their continued support. Frankly speaking, so with the awesome panel, so when I planned this webinar with the Mike Lee, so nobody, that time didn't believe we're gonna make it. So we can invite this great, awesome panelist in just one time, just one place, but we made this successfully. I really appreciate Mike Lee, It's a huge effort, and our panelists as well. As the president of KAPAL California, I'd like to expand my heartfelt appreciation to each panelist to actively continue to our webinar on the funding roadmap. So actually, I try to actively participate in the this webinar too, but some kind of technical issues. So just but looking at witness this such a wonderful webinar discussions, it's a truly amazing experience. So KAPAL California, we have hosted 3 to 4 seminars every year with the different topics. So it's hard to be humble, but the success of our recent seminar webinar served as a great testimony to strength of potential of a Korean healthcare company. Again, on behalf of KAPAL California, I expanded my gratitude once again to our panelists and our sponsors. Lastly, I appreciate KAPAL members who operate this webinar well. Thank you.
Thank you, Mr. Kim. And again, to all of our panelists and their time this evening, to our sponsors and to our participants, thank you for your time and commitment to the excellence that we would like to sort of continue on this mission to our industry. Looking forward to future engagements, be it in person or via webinar. And just have a wonderful rest of your day and evening wherever you are across the world. Good night.